All right, guys. Ladies and gentlemen, welcome to the 130 educational ongoing mentorship experience here in Shine's Trading Room. I wanted to take out a couple minutes today out of my time to try to pass on a little more knowledge to you guys as we every day try to put something out there and try to grow. As we always say, this is not a one-day learning curve. This is an ongoing mentorship experience, and that's what we try to do. Along with, I'd say, getting out there the fastest, most accurate depiction of not only market conditions but some of the breaking news and breaking opportunities that are out there. And I strongly believe that nobody does it faster than us, and I put the challenge out there for people to try to do it faster than us because nobody does. It's just it's uncanny how quickly we get things out to people, almost eerie, and then they materialize. Two things I want to talk about before I go into Drop of Education. First thing in the middle of my screen, I'm looking at RIM right now. On the top right-hand corner of my screen, if you guys could see, let me make sure you guys could see that all right. Yeah, top right-hand corner of my screen, you have RIM, right? This is a 3-day chart of RIM. I'd like to talk about, and we've been addressing it a lot. Let's talk about this resistance on RIM up there over the past 3 days at $12. And if you look at it, I believe, it was early Monday, potentially Tuesday, where we talked about this $12 resistance, and twice it went up there. So the first time it went up to 12, actually blipped people through that trade. This is a little more of a swing trade, and blipped people through that $12 level just to squeeze out some of the shorts. I believe 12.15 was the level. Then the stock came into 11.50, rallied back up on the day to $12. Even crazier, the next day it opened up at $12 even, where I believe from that level that we talked about, there was probably about 2 cents worth of risk. The way we control our risk as traders is we put in stops above certain levels, especially trying to avoid the blip trade, as we've been focusing on that this week for sure. And you put on stops above $12 in order to protect your short position. Remember, going long and going short, try to be as flexible as possible. If you see weakness and you see resistance in something, it potentially could be an opportunity for a short. If you see strength and you see a support level where you feel comfortable with, you should be looking at a potential long position in that name. You basically answer the questions yourself, and you sort of give that landscape for yourself. So for me, I'm looking at this RIM, and I look at it at $12 twice, has that level to touch as resistance. Obviously, the stock over the past couple weeks has come from, I believe, $6.50 or so up to $12. At $12, we had a clear-cut depiction of some resistance up there. Stock continued to touch $12 twice and open up the next day at $12 again, just to pull in. So the key of the conversation was not just the protection, but also the risk reward on the trade, and also the potential of holding a winning position. And we talk about holding a winning position is what separates the men from the boys and the women from the girls, and the really successful traders from the non-successful traders. So you have this position where stocks at $12, literally the next stop is 11 and change, just for it to break that 11 support on a sell-off at the end of this afternoon, to get down to, I believe, is about 10.90, traded at about 10.60 after the close. And guess what happens this morning? Stock opens at $10.20. We get a word in the Shine's Trading Room live trading broadcast that this is a level, this is a gap fill from the other day, and it becomes a long position until you get stopped out on some strength this morning, continued rally through above this moving average, and then above $11. One more note that I wanted to talk about because it happened 5 minutes ago. It's actually funny because you could see it on my chart. The chart that I use and the system that I use, and we always talk about being on the right system, allows for me to plot my entries and my exits. If you look at what I did, I found this short entry again at $11.20, or almost $11.20. I think it was about $11.17. Again, a short entry, and the reason why I did is because I look back to yesterday's levels. I look back to yesterday's potential resistance. I use the collective as certain technical analysis gives me a little bit of a heads up, and allows for me to have, most important again, a stop, a risk reward scenario in my favor. I put in a stop only a couple cents higher, just for the stock to come in, for me to cover right above the whole number again, predicting a retracement back to that whole number. Why the whole number? It looks like it was support once here. It looks like it became the breakdown of support here. It looks like it was above the breakout here. And most important, I think it's probably the gravitating, or the VWAP, as we call it at times, gravitating back towards that conscious level of that $11 point. And that's why I just threw a quick trade on, just to capitalize on that move also. But remember, it's about depicting the trade, picturing it in your mind, and being able to act upon it. And the way you can act upon it and feel comfortable, and I've been getting from traders out there, I'm not sure if Don's on the broadcast, but from Don, don't be afraid of a trade if you're able to use your stops properly. Okay, guys, continue to post in the chat also, as the market is moving around, and we don't want to miss any opportunities. And somebody just posted Apple getting close to the high of the day and almost going positive. I want to do a quick piece of education after that. One more chart before we go out. This is SRPT. Okay, SRPT today. Again, plotting my entries. We got this call super early today. And there was some takeout rumors floating around. As we get it, we send it out to you guys from any of our presenters or any of our community members. So the call was about 11:15 this morning, a huge breakout, breaking above those levels where I bought, and then I sold the top part of the rally when I saw a seller come into the marketplace right around here at what was it, about $30.50 was the seller. So I capitalized on it just in small position. As you know, these things that could halt and these things that can move, you don't have as much control over the risk reward, and so we need to be cognizant of making sure we do not have too much risk on the table when we do a trade like that. And Apple does break out to new high. Great heads up on that, Lou. Also on eBay, another internet name, killing it this holiday season so far. Market breaks out also to the upside. I'm going to go to a quick piece of education for a moment. And I just wanted to address this. This is, again, the piecing in and piecing out of positions. When we do our week-long intensive educational course, we focus on this as one of our ideas and concepts of how to get in. And obviously, it's a whole course in itself. But remember, this is what you're trying to do. At times, I look for people to close their eyes and to picture this, battle that goes on between the buying momentum and the selling momentum. Okay, who's going to win that out? When does that buying momentum switch into selling momentum? How many people saw this morning in Deckers? Did we not sell into that buying momentum at the top part of the range? I think I made the announcement of selling my last call, my last option, long option that I had. I made that call right there, about 15 cents, 10 cents from the high of the day. Stock retraced to $1.50 from there, obviously coming back and showing some strength now. But it's about selling into that buying momentum and buying into the selling momentum in the proper direction, not the opposite. If you wait too long and you don't anticipate that trade happening, you're going to be late to the party. If you're late to the party, you're going to lose every time. You're going to end up forcing the sale. You're going to have to, instead of being able to get taken on the offer, which I did in that option, you'll have to start hitting the bid, losing the spread. Yesterday we talked about how much more you make by offering or by bidding, and this is one way to definitely take advantage of it and sell into that buying momentum, buy into the selling momentum. You guys with me on that so far? You guys doing that, close your eyes and do a little yoga, just meditation when you think about the selling momentum. You have to be able to start feeling that. Thanks, Leo. Guys, also right now start entering some questions or some comments, or take a look at some charts if you guys want to, or analysis, a breakdown of any names that you want. One more thing I just wanted to talk about. Remember, Traders Poker, right? How many of you guys play poker out there? How many of you guys, we're not even going to get into the casino analogies today, but when you do play poker, please understand that the market's opportunity is to try to beat you up and try to take you out of the game, and you have to be able to anticipate that and have to outsmart them. So in poker, if you check and somebody raises, and then you check raise them, you're anticipating the anticipation of the next trade, of the next move of your opponent. Same thing in the marketplace. Somebody shows a big offer. Are they really selling, or are they really trying to get you to sell out your position to them or to somebody who's a little bit more savvy than you? Just remember that in a macro type of picture, and it's always about being one step ahead of your opponent, whether it's in poker, whether it's in checkers or chess or any of those type of strategy sessions. You have to be able to outsmart your opponent. If not, you're going to get outsmarted. Peter, I believe you sent in that VRML question. I'm going to just escape from here. Just typed in VRML. Again, a small stock, a huge move from $1.20 to $1.66. Right now, it does look in the middle part of that range. As usual, we find ourselves in those ranges. I don't like to trade certain names unless it breaks out of a range. So once again, below $1.60 or $1.55, it looks like the bottom part of the range. This is just being today. And above, I'd say about $1.75 or so is maybe another idea, another time to look at it. We addressed it yesterday on why I don't do that, because middle parts of the range, I don't like to trade, because I think the risk reward gets bad in both directions. Chances are you're not going to hold enough to the correct side, and if you're wrong and it breaks out of the range, you actually have just as much 50% risk and 50% reward, and I hate having that type of formula on my table. MMR, somebody wanted to talk about an MMR. MMR is an interesting name, and this is over the past couple of days. Obviously, the stock coming from not only 12 but above 14 over the past 90 days. But over the past few days, you have 12 to 8.25. Yesterday, there was some incredible calls out in the live trading broadcast at about 7:25. I believe people were already looking for a bottom. Looks a little bit like the RIM chart today. Where you had the gap down and then a rally through. So there's a huge gap down yesterday. When you do buy a gap down, one of my rules is we don't short the gap down, but when you do buy a gap down, you have a stop right below the area where you enter. And now you have all this potential upside. I was a little bit bearish because the name had some negative, I believe it was JP Morgan yesterday that put out some negative comments on it that they were worthless. Also, you have insight from a market master like 8Ball telling us that this reminds him of ATPG, which eventually just went off the board. No real bounce back today, even with the market up about and we are down. Do you guys still hear me? Okay. Oh, sorry about that. Not sure where I left you guys. Let's talk about the options in MMR. Just addressing some of the options. For me, when I take a position overnight in MMR through the options market, eliminates a lot of my risk, keeps me some of the upside, and allows for me to avoid getting the big hurt, and that's what the option market does. One more thing I'd like to discuss, something called lottery tickets. You guys hear it very often on the broadcast, something called lottery tickets. And in my lottery tickets, I look for those Friday expirations, the weeklies or even the monthlies, Friday expiration, and those give me the ability to buy something on the cheap, anywhere between 1 and 11 cents. To buy something, and then hope that I can make 8 to 10 times the amount or 20 times the amount and be able to capitalize on that. Most of the time, it does not materialize, and you have to be ready to lose all your investment because a lottery ticket is a lottery ticket. Tonight, Powerball is $500 million. Same type of thing. Lottery tickets, you either lose all your money and you lose it quick, or you potentially have the opportunity for $500 million. Same thing in the options market. One last thing on my, here's my Deckers. This is one of my option accounts. Here's my Deckers. Here's as you guys could see, month to date up about 3% in my options account, about 24% year to date. Still grinding it out, still bringing in revenue after revenue, and just trying to chop away. But just today in the Deckers, my last sale of one call, $4.60. The 37.50 calls for January that I sold. If you guys remember, I bought them down there for 55 cents, down when the stock was about $30 or $31. So once again, piecing into position, piecing out of position, just feels right. That's the way I look to get into some of these names. Yeah, I sold some early on the Deckers. I sold some at about $1.90, most of them in the $2 range, probably on the average, and then today at the $4.60 level. Any other questions that are coming in? Guys, if you want to address something, let's do it now. We got about 12 seconds as I'm getting the hook to get off the educational display right now. Any questions? Got 9 seconds. 6. Okay, guys, so that's going to wrap it up for today's educational piece. Thank you for joining us here in Shine's Trading Room. We will see everybody back on the live trading broadcast. And go ahead.